Welcome everybody to another session with Victory Tax Lawyers. I'm Parham Khorsandi, Managing Partner. Today's topic is going to be about Fbar, which is the Foreign Bank Account Reporting, which basically states that if you have $10,000 or more in a foreign bank account, it's all accounts combined, not just in each account, you have to report that to the IRS. So, this has been an ongoing issue for 50 years. Back in the 70s and 80s, everybody was moving their money offshore to Switzerland, Bahamas, etc. And those places did not have any reporting requirement to the IRS or to the US government. But around 2008, that all changed, where the IRS and the Department of Justice, with the help of President Obama, got very aggressive with how they report the foreign bank accounts from these banks. Meaning that the US government said if any bank wants to bank here and doesn't want us to freeze their assets, they better start providing us with information on who has foreign bank accounts. So that really shook everything up. It started with the bank UBS, that was a very, very heavy hitter in the industry and had the most secrecy out of everybody. And so it started out there, and since 2008, the IRS has been coming after everybody for these foreign bank accounts. So it's really, the concept is pretty simple, like I stated. If you have any offshore accounts combined that over $10,000, you do have a reporting requirement. And the reporting requirement is on the form FinCEN 114 that you can submit online. And the due date of that form follows your tax return. So it's either going to be April 15th, or if you file an extension, October 15th, and you can make that submission online. Now, if you fail to make that submission, you can get into a lot of trouble, especially if you fail to make that submission for a number of years. The IRS can come after you if you don't file the Fbar form properly and hit you with a 50% penalty, meaning 50% of the highest amount in the account. So the Fbar can be a big deal, but if you follow the right procedure and make the proper disclosures, you can come out with it with either no penalty at all, or maybe a potential of only a 5% penalty. So there are different avenues that we can take to avoid not only criminal implications and jail time, but avoid that 50% penalty altogether as well. So if you do have a foreign bank account, or even it extends to foreign corporations, foreign assets, artwork, real property, anything that has a value offshore, all that will be considered under the umbrella of Fbar and can be hit with the penalty. And so if you do have anything offshore, whether you're a dual citizen or you were born in another country or you received an inheritance, you would still have that filing requirement of filing the Fbar form timely. If you guys have any more questions, we have a fantastic blog on this as well, and also FAQs. You can always check out our website, victorytaxlaw.com.